These are crazy times in the crypto space as the value of USDC, the most regulated stablecoin, has depegged from the value of the US dollar over the weekend. And of course, this is following the collapse of Silicon Valley Bank, in which the company Circle had $3.3 billion of reserves. And people are feeling the fear. The FUD is crazy. And also many are concerned that this contagion is going to spread to other banks. There are already rumors that other banks are in a similar predicament. So how are we going to be navigating this, and what can we expect moving forward? We are going to be diving deep into that today. So make sure to like the video, subscribe to the channel, and click the bell for notifications, because we are bringing you the juiciest and the most timely Bitcoin updates here on YouTube. First of all, Circle is reassuring everybody that don't worry, guys, things are going to be all right. And they made a blog post, and already we can see the value of USDC on some exchanges is back up almost to where it was, almost about $1. So it depends on what exchange you're looking at, but Circle came out and said on Friday, they tweeted, look, we only have 3.3 billion out of our total 40 billion reserves at Silicon Valley Bank. And then on Saturday, they said in a blog post that liquidity operations will resume as normal when banks open on Monday in the United States. So this is a very interesting time, because we're starting to see banks go under. We saw Silvergate go under. Now we're seeing Silicon Valley Bank go under, which, by the way, I'm pretty sure it's like the 16th largest bank in the United States. So this is actually a really big deal. And tomorrow, which is Monday, we are going to see, are things going to return to normal? Now, to throw a whole bunch of other things into the mix, just last week, Jerome Powell came out and spoke, and he said, look, we're going to have to raise interest rates higher, faster than expected, because inflation is not coming down. Well, here's the issue. If the Fed continues to raise interest rates, we are going to see more and more banks fall into the same fate as Silicon Valley Bank, because the higher the interest rates go, the more banks are in net unrealized loss. Now, to add insult to injury, this week on Tuesday, we have the CPI announcement. So we're going to find out, has inflation gone up or has inflation gone down? And we know all these things create volatility in the markets. Now, there may be a silver lining here, guys. There may be a silver lining, especially for those of us who are believers in cryptocurrency. Right now, I just want to say this is not a crypto problem right now. This is a bank problem. All the issues that we have had in the crypto space during the past year have not been cryptocurrency problems. They have been bank problems. FTX was basically a bank, right? It was a bank. And Silicon Valley Bank is a bank. This has nothing to do with crypto. But first, let's dive into these Bitcoin charts. Very, very important stuff. As Bitcoin is currently holding very key support right now, we are coming down to a Fibonacci golden pocket and a CME futures gap at around $19,500. We are getting a bounce here. I am long from this level. This is a level that we gave in the Casper Crew VIP Discord. Right here, as we were dropping down, I said these are the three supports we need to be aware of, and one of them, of course, is 19,552. Still holding the swing short trade that we gave in the Casper Crew VIP Discord from 25 to 85. And here's one thing we need to remember. As traders, regardless of what is happening, if we know how to do technical analysis, we can profit in these markets whether things are going up or going down. And by the way, if you want to join the Casper Crew VIP Discord, where every single day we give the levels, we give the setups, we do 3 live streams every single weekday for New York Open, London Open, and Asia Open. You can go to patreon.com/Jason Casper. Also, to take advantage of 0% limit fees on ByBit for derivative contracts, check out the link in the description. It's actually a really good deal, especially if you're scalping on lower term timeframes. This thing actually turned out to be a little bit more than a scalp, but those fees will eat into your profits. It's actually a really good deal if you know how to trade. So if Bitcoin is going to continue to get a move up from here, there are key areas of resistance that we need to be aware of, and area number one, of course, is going to be the support resistance flip at about $21,600. That's going to be very, very key. If we get a move up there, be looking for a rejection. The second place we really need to be looking for resistance right now is going to be the Fibonacci golden pocket at around $23,000, confluence with the high volume node. Because we've officially made a lower low on a daily time frame, taking out the low at 21,000 21.4, and we've even taken out the low at 20.3. I expect now that the downtrend will continue for a little while, especially with all these kinds of bearish things that are happening. So if we start to short squeeze, be aware of 21.6 and 23K. To the downside, we have some very key zones of support that we also need to be aware of if we see another big drop. Support number one is going to be $18.3 thousand, where we have the value area low of the macro range, confluence with the 786, confluence with a major support resistance flip that we've been respecting since the month of June. So we need to be aware of these levels because these are places where we could find a bounce. Remember, even in massive bearish dumps, if we know the levels, we can take trades very, very accurately, right? Just like this long trade right here, because we knew the level and we knew what confirmations to look for on the chart. Okay, very, very important stuff. If we continue to dump lower, 16.8 is going to be key. And then, of course, I will be looking to come back down and test these lows. Okay, test these lows. Now, is there a silver lining here? With all this FUD going on, with these banks collapsing, with stablecoins depegging from the value of the US dollar, I would argue that yes, there is a silver lining, and I would also argue that in the macro, these things are bullish for crypto. These things are bullish for crypto. The fact that we are getting so much FUD right now is bullish for crypto in the long term because Bitcoin will pump when people have lost all hope that Bitcoin will pump, right? Crypto will pump when people have lost all hope that Bitcoin will pump. Now, first of all, the fact that people are losing trust in banks is good for things like Bitcoin because Bitcoin allows you to make transactions without needing a bank, right? Now, people are always comparing the value of Bitcoin to the value of the US dollar, but that's not really what we should be doing, right? We should be saying, look, one Bitcoin is always equal to one Bitcoin. Now, I know for all intents and purposes, when it comes to real life, we care about the US dollar value of a Bitcoin. But eventually, if the US dollar stops becoming a thing, Bitcoin could act actually as a protection against some of the things that we're seeing right now in the financial sector. And even more so, the thing that encourages me about seeing all this FUD is that we are, historically speaking, at a place in the 4-year cycle where we are at the bottom, right? We always do bottom out in between the 786 and the 886 Fibonacci as we print the macro bottom signal on the monthly market Cipher B timeframe. We also understand that when we enter into this phase, which is about 1 year before the halving happens, we have crazy volatility. In fact, we can see back in 2015, we printed the green dot, we got a little pump, and then we immediately printed a red dot and we put in a double bottom on some exchanges. Bitcoin even put in a lower low after the relief rally at the bottom of the bear market. And again, back here in 2018, we totally bottomed out, got a massive relief rally, and then we put in a double bottom. Okay. Now, a lot of people have been saying that, Jason, this time is totally different because we are in a macro global, we're heading into a macro global recession. There's wars, there's famines. This is not the bull market that has existed for the past 10 years throughout Bitcoin's history, right? Because Bitcoin was created after the 2008 recession. It was created in 2010, and the Fed was really printing and stimulating the economy, bailing out all these big banks, creating all this money out of nowhere. And that's what allowed Bitcoin to become so bullish. And back here in 2020, the Fed once again started printing like crazy. The QE, the stimulus money coming in to basically prop up the economy after everything happened back in March 2020. Well, the silver lining here may be this. If we start to see banks collapsing like this, the Fed will have no choice but to turn back on that printing press, to start the quantitative easing again. Because there are two choices. Either this whole thing falls or they prop it up by just printing more and more money. And, there are different views about what is happening right now with the financial system in general in the world. There are talks of a new financial system being implemented. Well, in order for a new financial system to be implemented, we are going to have a doing away of the old system. And if the Fed is going to turn back on the printing press and begin the QE, that very well could cause the dollar to enter into a hyperinflationary state, where the only choice would be to bring in a new financial system. But in the meantime, what that would do is it would create more money. It would stimulate the economy, very similar to what happened back here in 2020. And a lot of this money would go into risk assets like cryptocurrency, like stocks. Because now, instead of raising interest rates, trying to halt things, the Fed is going to have to be trying to stimulate the economy to prevent these banks from going under. So that is one potential silver lining that we do have. And it just so happens that this potential is lining up with the bottom of the bear market, right? As we approach 1 year into the halving, we're potentially setting ourselves up for a situation where the Fed is going to start now quantitative easing or pivoting or turning back on the printing press. And in the meantime, guys, what we need to do as traders is we need to be understanding what levels are going to give us those opportunities to get into trades. If you want to learn this, you can check out the course at jasoncaspertrading.com. 20% discount. This will give you the point A to point B system so that you always know where you're looking to take a trade, where your stop loss, take profit should be, etc., etc. That is it for today's video, guys. God bless everybody in the name of Jesus the Messiah, and I will see everybody in that next video. Peace.